we've been speaking with a whole host of experts, especially since budget, about what to do with some of the consumption stocks and whether they're going to outperform capex or not. Here's a slice of some of the opinion that we gathered.
Key takeaway from the budget is consumption. So at the margin, consumption stocks are going to do really well because first of all, you are coming out of the budget, with very little expectation, given that consumption stocks have not done well over some time. So, this 1 lakh crore saving in income tax, and if you give it a marginal propensity to save of around 20%, that is marginal propensity to consume of around 80%, then this 1 lakh crore saving in taxes will actually mean a multiplier of 5. If you assume that of that 1 lakh crore, 20% is going to be saved and 80% is going to be spent. So depending on what is the rate of savings, the multiplier could be as high as 3 lakh, 4 lakh or 5 lakh crore. If the saving is 20%, then it's 5 lakh crores. If it's 25%, then 4 lakh crores. If it's 33%, it's 3 lakh. So this is basically going to be felt on consumption related stocks. And mind you, the consumer discretionary names are going to benefit more since the tax cut has happened on the corporate income tax side, not the GST side.
There has always been kind of premium valuations to Indian consumer stocks. I mean, compared to anywhere else in the EM, and at the peak, many of these consumer stocks, and you can't sort of broadly overgeneralize, but they were sort of trading at 50, 60, 70 times PE. Market itself at the peak in September, before we just downgraded it in October, was trading at 25 times the aggregate market. From there, I think we have seen a decent pullback in the market, close to 15% plus. But when you look across categories, including in consumption, you're seeing sort of 20% plus multiple deratings in in many of these stocks. So our sense is that you're getting to a level in aggregate terms where market is getting sort of more fairly valued. I mean, within that, for the headline market overall, we've sort of gone from 25 to 22 times PE, and our sort of fair value target is more like 21. A lot of FII is still kind of engaged in the consumption story in India, and so it still will trade at a relatively higher multiple to the rest of the indices and rest of the consumer pack across the EM.